And good evening. We're doing it live right here on 790 KABC in the 5 o'clock hour, live on the air and streaming live online worldwide for you at KABC.com, the on-demand Mottek On Money podcast at KABC.com, Apple iTunes, all your favorite podcast platforms. Big finish to the week on Wall Street with the latest reading on the Main Street economy out today. The monthly jobs report came in weaker than expected. The stocks today did see the biggest weekly gain of the year, with the Dow coming in for a closing gain of 222 points today at 34,061. The S&P 500 moved up 40.5 points, and the Nasdaq gained 184 points for the week. The Dow gained an eye-popping 5.1%. The S&P 500 climbed nearly 6% at 5.9%, and the Nasdaq jumped 6.6%. The Dow racking up the biggest weekly percentage gain since October of 2022, while the S&P 500 and Nasdaq each saw their strongest weekly jump since November of 2022. So the biggest weekly gain of the year. Stocks boosted on the latest jobs report, which came in weaker than expected, fueling optimism that the Fed might be done with raising interest rates. They did hold the line on short-term rates earlier this week. The U.S. added a modest 150,000 new jobs in the month of October in a sign of a cooling demand for labor, higher interest rates taking a bite out of the economy. The nation's unemployment rate also ticked higher to 3.9%, up from 3.8%. The October jobs report showed a gradual cooling of the job market that will be welcomed by those who want the Fed to stop raising rates, according to the Richmond Fed President Tom Barkin speaking today. The latest reading on business conditions at service-oriented companies such as retailers and restaurants slowed in October to a 5-month low, suggesting the economy has softened. The reading was below what analysts were expecting. Coming up later this hour, I'll talk about the jobs report. And also, if you're looking for your dream job, we have some good news for you. I'll be joined later this hour by Kevin Harbour, president of the BizFed Institute. If you're looking for a new job, the BizFed Institute has organized a workforce development forum and career fair for you next Wednesday at UCLA. We'll talk about that in today's jobs report and what's happening here with the LA economy. With a big player in the local business scene, Kevin Harbour, the president of the BizFed Institute here in Los Angeles. We're watching what's happening in the Middle East, of course, with Israeli Prime Minister Netanyahu today pushing back against U.S. pressure for a humanitarian pause in the nearly month-old war to protect civilians and allow more aid into Gaza, insisting there would be no temporary ceasefire until the roughly 240 hostages held by Hamas are released. The United Auto Workers Union reported to be gearing up to organize at Toyota and other non-union automakers, including Tesla. The UAW looking to capitalize on its success in bargaining with the big three automakers in Detroit. Meanwhile, as the push for electric cars continues here in California and nationwide, the Biden administration says it would indefinitely postpone a major oil and gas lease sale that was mandated by the so-called Inflation Reduction Act, pending an upcoming court decision. While gas and oil prices have soared again this year, it turns out offshore oil and gas permitting plunged to a 20-year low under the Biden administration. I'll discuss what's happening tonight with auto expert Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. But first, on your money, the markets, the economy, today's big jobs report, the big stock market rally, the Bitcoin rally we've seen this week, and wrapping up the best week the market has seen all year. Let's bring in investment expert Brian Perry now, chief investment strategist and portfolio manager at Mint Asset Management at mintassetmanagement.com. Brian Perry is also the author of the 25% Cash Machine. Brian, thank you very much for taking the call. A big week with a lot of moving parts here and biggest week of the year for the market and a nice finish here. Give us your view of this big action here this week.
Well, we'd love to close out the week on a strong note, Frank. It's been a while since we've been able to have this conversation, and the market here is showing some signs of life. For a lot of it was a lot of frustrated sideline money that wanted to get in on any good news here, and we got some of that here. Really, Jerome Powell kind of gave the wink and nod here on Wednesday at the FOMC presser conference when he noted that they may just decide to let the rest of these recent rate hikes do the work, and that's it was taken as a signal that it looks like the Fed's going to stand pat here, and certainly that was buttressed by the softer jobs numbers here today. And certainly with the Treasury coming out here earlier this week saying that they would bring about $776 billion in new funding to the market here, which was lower than the forecasted amount of something closer to $1 trillion. So, and those maturities would be of shorter duration as opposed to long-term bonds, which have not been well received in the market of late. So the combination of those things really kind of set in motion that, along with some good earnings here from some of the Magnificent Seven names. Although Apple reported numbers that were not to anyone's great disappointment, but they weren't of a great surprise either there. So they kind of noted that their December quarter revenue outlook would be a little bit just flat to down, and the stock didn't respond. But other ones had really good numbers here coming into this week here. Microsoft had great numbers here. Amazon had great numbers. Alphabet really had actually pretty good numbers here, even though their cloud business was a bit soft. But and the stock took a hit on that, but that'll probably recover well. And beyond that, NVIDIA's numbers will be out here soon, but the stock has been pushing higher going into their earnings report as well. So with that in mind, we've got the S&P back up here to almost 4,400 here, which is the next level of resistance. It closed today at 4,358. And it's been a good run up from 4,100. That's a strong move. It's like you noted, it's like 6% and change. The 10-year bond has made a big move here too. It's gone from 5% down to 4.6 or 4.5 and change. That's a dramatic move, for the benchmark. Debt security that runs the global, the global benchmark. So that's a fascinating move out of the 10-year, and that really helped a lot of things. Even all sectors moved here. Utilities and real estate had a big move because they were so blown out, and so big recovery rally there. A lot of short covering as well here. And with this slower payroll growth situation here, a little bit of rise in unemployment, slower wage growth. And the ISM services and PMI dropped, from 53.6 to 51.8 in September. That reflects a slowdown in a pace of expansion, still expanding for the services sector, but still at a slower pace. And that's finally good news is good news, because it's been, hot economic news has caused a rise in yields and a drop in stocks. So we're getting more of a Goldilocks scenario here as we go into this seasonality time of the year where stocks generally try to push higher here. And we'll just have to see what next week holds, because we really don't have a lot of catalysts out there. There's more earnings out, but most of the heavyweights have already reported here. And what I also saw was just huge buying in the TLT, which is the iShares 20-year T-bond ETF. So there was a lot of speculation coming into this week that bonds would rally there. So on the flip side, global debt hit a record high of $320 trillion in October. That's the equivalent of 336% of global GDP. So what people need to be very conscious of is that what it presents is it's termed as called rollover risk. And the rollover risk process, Frank, is that of all this debt maturing that that was issued in the past several years at 1 to 2, 3%. Is going to have to be rolled over and then reissued at 5 to 7, 8%. That's going to cause a tremendous boost in the cost of interest to carry that debt. So that's something that's more of a larger macro picture here, but that for people that are in the market, something to think about here going into the early part of next year.
On there live with investment expert Brian Perry at Mint Asset Management. And Brian, let me ask you this. It's hard to ignore the move in the cryptos. Bitcoin close to 35,000 here this evening. Of course, the big Sam Bankman-Fried news broke during this program last evening, where he was found guilty and faces more than 100 years in prison. It looks like the crypto world cheering this guy getting nailed, and hope that others won't follow in his footsteps with what he did. But what's your view on this big crypto rally along with all this week?
Well, I still think just like I noted, I think it's all about, do the fiat currencies really hold up? Today you saw the dollar crack, and you saw that some follow through with crypto, because the dollar's been trading very strong against, and yet at the same time we've watched both gold and crypto push higher, even as the dollar has held steady at the 106 level here, the DXY, which is the U.S. dollar index. Against 5 other major currencies around the world. So, but today, a clear 1% drop in the DXY brought about further buying into gold and into crypto here, which is, there's your hedge against all the currencies, because again, when you got this kind of debt floating around the world, It's just, there's really just one path, for the value of currencies unless people start to get their balance sheets together, and that path is lower in valuation. So having something that is a hedge against fiat currencies, the dollar, and the yen and the euro and the pound sterling and the Swedish krona and other developing market currencies, the real and Brazil and others, it's imperative that people look at the big picture from the standpoint of what direction our currency's headed and how do I protect the value of my assets here, not just here at home, but also my exposure to other event risk around the world and other currency risk and financial contagion.
All right, and we've seen Bitcoin move higher, certainly recently on optimism that the regulators will soon approve these spot Bitcoin exchange-traded funds, ETFs, which is expected to bring in a new wave of consumer retail investors and institutional investors' interest in digital assets. Of course, on this program, we have the biggest fans of crypto and the harshest critics, and certainly that was the case this week in our conversations with our analysts here. What do you think about these upcoming exchange-traded ETFs focusing on the cryptos?
Well, it all sounds like it's going to happen. Despite the wishes of some of the regulators, there's a lot of momentum there when you have BlackRock and the big houses that want this to happen. It's a great piece of business for them, and for that matter, I've been long in recommending to subscribers and clients, Coinbase, COIN here. That stock had a big move from 70 to 86 this week. That's just a very strong move. But they had really good numbers, too. They're making money 4 different ways at that firm, even though the trading volume was down. But the trading volume is going to really push up, and they've been chosen by BlackRock and Fidelity as their custodian, going forward here for these spot Bitcoin ETFs. So if you want to just be in the picks and shovels business and, quote, and be in the middle of it all, I think Coinbase is the way to play this.
All right, certainly the market's climbing that proverbial wall of worry with what's happening in the Middle East and elsewhere in the world. Ukraine and Russia still going on, and a lot of concerns about the economy still, given the latest jobs report today and that other reading we got today on the retail and restaurant reading, business conditions and service-oriented companies hitting a 5-month low. And at this point, Brian, is that wall of worry going to continue to be climbed? And at this point, let me ask you, where are you putting money now and or taking it off the table?
I do, Frank. I think that once we get into after the holiday season here, people are going to dial it back. We're already starting to see that in a lot of different, very smaller surveys that are actually more accurate. And where I'm seeing a lot of the retailers have talked about this. Walmart, Target have said their basket loads are less going through, and that's just not food just because of weight loss drugs. It's just a number of items here. Even Costco starting to make notable mention that some of the bigger ticket items are not making it out the door nearly as fast as they were. And so I think that we're starting to see the beginning of that. And, that's, from a standpoint of hard goods, that makes all the sense in the world. It's really when people start reducing the amount of travel and going out to these, restaurants and theaters and concerts. Live Nation had huge numbers here today. They posted, because Taylor Swift concerts and things like that. But again, I think when they look at, their budget and they say, well, that's it. No more Taylor Swift for a couple, 3 years if you're, the general concert goer because of the cost of going to those, then I think you start to see kind of a hurrah of consumer spending here going into the holiday season because we all want to feel good and have a wonderful time with friends, family, and all that, and around the tree and our celebrations. But at the same time, anecdotally, I was in an Outback Steakhouse recently at 5 o'clock on an afternoon on a Friday, and there were only 6 people in the restaurant, and normally that's not the case. Now, granted, as we're going to get busier later in the evening, but still, normally that restaurant was rather packed with a lot of happy hour people prior to. So I'm starting to see that, and people talking about it. Generally speaking, that they've been running up their household budgets here, and they what you saw in the most telling part was in the personal consumption expenditures index reading last week. That was down the discretionary part where people are actually taking money out of their savings to maintain their current spending habits, and that's that was down like 0.4%. That was a big hit. So normally it's up around 2%, and that number came down to like 1.6. That can't go on for very long before people just start reducing their spending dramatically. So but if rates come down significantly in the middle part of next year, then that'll pick back up. But between now and then, I think there's a pause in some consumer spending that deserves people some caution in terms of owning a lot of retail stocks or just being careful about the financials especially.
All right. It looks like a lot of money going into Taylor Swift's pocket. As you might have seen, Bloomberg News declaring that Taylor Swift is officially a billionaire now. Taylor Swift's net worth at $1.1 billion based on the value of her music catalog, earnings from touring and streaming, her real estate portfolio, and royalties from music sales. So congratulations to Taylor Swift, who also has a place here in Southern California. Any other specific places you're putting money now or taking it off the table here, Brian Perry? What about the Magnificent Seven? Are they coming back to life here?
Yeah. I mean, a lot of the stuff gapped higher, Frank, and we need to, give it a chance to come in and breathe here. Amazon on a pullback, sure. These stocks will typically back and fill, after they've had these big, post-earnings gap higher. Microsoft, for sure. Arista Networks, Lululemon, Macro Libre, MELI, which is the Amazon of Latin America. DraftKings, big move, big numbers, traded higher. What I was buying here in the week here, along the way here also, was Visa. Looks really good. Novo Nordisk, NVO, the big weight loss play there. Dell Technologies. You got to have servers in order to have AI chips. Dell Technologies. General Electric had great numbers here. Big demand for their aerospace engines. SoFi Bank, right in your direction, right in your backyard there. Great numbers. It was a trifecta of great numbers across the board. Looks great. CrowdStrike. We're going to continue to see a lot of cybersecurity attacks around, all over the place, and Crowd is one of the 2 or 3 best. And coming off, I took some partial gains here in the SPY, the QQQs, and Pinterest and Caterpillar missed their numbers, so I took that off. But one trade that I think people really ought to look at there for income is the sweet spot right now looks like the 3 to 5 year corporate bond trade, investment grade. You can get around 6 to 6.25% in this particular window. And we're talking about, I'd rather have my money with Berkshire Hathaway than a lot of different banks and maybe even the U.S. government at this point. So you can buy into these ETFs that are paying better than 6% for investment grade U.S. corporate bonds, and really diversify out from the Treasury market if you think that there's any notion of default risk or whatever in that market. So I've been doing some of that for clients, and I think that that's a really solid trade right now, Frank, for people that want income, and they think that if rates are topping out here, it's a good time to start locking it in.
Well, Brian, thank you very much for taking the call here this evening to wrap up a big week. We do appreciate it and hope to catch you again next week. That is investment expert Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. He's also author of the 25% Cash Machine. Brian, it's always great to have you with us here. Have a great weekend, and thanks again for joining us here tonight.
Always a pleasure, Frank. Thank you much.
Thank you very much, and let's get right out to the freeways now. You're on 790 KBC. Friends like you and me have our ear to the ground on all things business. We like to be informed and well prepared. As important as finance is, I want to make sure you have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still, we can get caught off guard as people are so focused on their destination or whatever that they might not have a plan if they're in an accident that's not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're hurt in an accident, you'll be ready with your first call to make Clark Fielding part of your team right away, right off the bat. Fielding Law aims for the highest possible settlement, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of an accident, call for a free consultation with Fielding Law. You can really trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, bicycle, you name it. Call 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. 790 KBC welcomes Richard Marx Solo and KT Tunstall coming to the Cerritos Center for the Performing Arts November 12th. Tickets are on sale now at cerritoscenter.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller 9. Call right now, 1-888-790-5222. Mottek On Money continues here in 790 KBC. Jeff Bezos, who founded Amazon out of his Seattle garage in 1994, is leaving Seattle and moving to South Florida to be near his parents and his space company, Blue Origin. Jeff Bezos announcing that decision this week, which included a video of him touring one of Amazon's earliest offices, the garage of his rented home in the Seattle area. Jeff Bezos moving to Miami to be near his parents and his space company. Big week for the stock market. The Dow coming in for a closing gain today of 222 points to settle at 34,061. The S&P 500 of 40 at 4,358. And the NASDAQ gained 184 today at 13,478. We just racked up the best week of the year for the stock market, with the Dow posting a gain of 5.1% this week. The S&P 500 of 5.9 and the NASDAQ up 6.6% for the week. The latest jobs report showing signs of cooling demand for labor as higher interest rates have taken a bite out of the economy. Looks like the economy added just 150,000 new jobs in the month of October, and the nation's unemployment rate did tick higher to 3.9% from 3.8%. This latest report fueling investor optimism that the Fed might be done raising interest rates. They did hold the line earlier this week. Taking a look at the yield in the 10-year note, it has pulled back to 4.52%. Cryptos have had a big week. We see right now Bitcoin up about $100 at $34,718. Ethereum up 3 at $1,833, and Doge at 7 cents. The price of oil hovering just above $80 a barrel. Watching what's happening with the Hollywood labor situation, Hollywood's major studios preparing to make an offer to SAG-AFTRA today that they hope will end the 113-day actors' strike. This according to Variety this afternoon. Now the latest news for you here in 790 KBC. Mottek On Money continues here in 790 KBC. The hot labor summer becoming the hot labor autumn. We're watching what's happening with the actors' strike here in Hollywood. According to Variety, Hollywood's major studios are preparing to make an offer to SAG-AFTRA today that they hope will end the 113-day actors' strike. This is the very latest now on what's happening. The Alliance of Motion Picture and TV Producers had previously warned the Actors Union that if a deal could not be reached by the end of this week, the networks would have to cancel certain TV shows, and there would be further delays in 2024 summer theatrical releases. The talks could go well into the weekend, according to Variety, especially if the two sides see that a tentative agreement is within reach. Stay tuned. Meanwhile, a big week in Detroit as some of the deals came together there involving the United Auto Workers Union. Now the union's reported to be gearing up to organize at Toyota and other non-union automakers, including Tesla. The UAW looking to capitalize on its success in bargaining with the big three automakers in Detroit. Meanwhile, as the push for electric cars continues, the Biden administration says it would indefinitely postpone a major oil and gas lease sale that was mandated by the so-called Inflation Reduction Act, pending an upcoming court decision. While gas and oil prices have soared again this year, it turns out offshore oil and gas permitting plunged to a 20-year low under the Biden administration. Let's bring in auto expert Lauren Fix now, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, thank you very much for taking the call. It's been a while since we've chatted behind live microphones. A lot going on here. First of all, give us the latest on the UAW and that you've been following so closely this week.
Well, the UAW finally has settled their agreements with both Canada under UAW and Canada is called Unifor. So they're completely settled. They actually weren't going to settle the Stellantis plant. And at midnight on Sunday, I was kind of watching to see what happened, and they said they were going to go on strike. And 4 hours later at 4 a.m., they finally said, you know what, we're the only ones not making this agreement. So they did come up with an agreement, which is good because there's workers there that need to get product out the door. All these car manufacturers are hurting in a lot of ways, and so are the employees. So there's no gain in everyone being on strike. So we have Unifor settled. UAW is voted on. Sean Fain calls it a win. They got a cost of living raise. They got back pay. The employees also got a signing bonus of $5,000. But when you look at it from the employee standpoint, they're very happy. However, car manufacturers are not going to suddenly tell their CEOs they're going to get a cut in pay. What will happen, and we all know this, is they'll cut some middle management. They'll cut down their product line options, and most likely you're going to see an increase in the price of a vehicle somewhere around $1,000 to $1,500. So be prepared for that. You may not see it, you may not realize it because you don't go to buy a car every year or every week. So maybe 3 years later, you go to buy a car and it's, $2,500 more versus $1,500 more. That's because somehow they have to make up that difference.
That's an excellent point for consumers. We're going to end up having to pay for this, of course. Now, what about the UAW now taking on Tesla, which is non-union, as well as trying to organize at Toyota? What do you think is going to happen there?
It's interesting. Many a times they've tried to unionize Tesla with zero efforts. As a matter of fact, because Tesla was originally based in California, they thought they had a chance. So Elon Musk has now moved it to Texas. They're in Austin, Texas. Huge facility. If you're ever out there, you should drive by it. It's quite a large place. And that is a non-union state right now. So that's his plan. They've made attempts to unionize Volkswagen in Chattanooga, Tennessee. They've had 3 votes. All 3 votes have failed. And in all of this going on, Toyota saw this coming. So they raised their pay for their employees by 9%. This is their 4th pay raise they've offered their employees because you don't want to lose your good employees that are trained to a union shop because you won't get them back. So they're trying to keep the employees that they have, and you're starting to see that across the board. So the cost of cars across the board will go up because somebody's got to pay for this increase in pay. Because when you think of $10 an hour, it's not exactly $10 an hour. You have to match Social Security. You've got all the other disability and benefits that go with that, and it's also taxable on both sides. So I'm sure that you're going to see the cost of a vehicle get even more expensive.
Does Tesla even have any employees? Every time I see a Tesla plant, it looks like robots or those robotic arms working on putting together the cars.
Yeah, that's exactly what is happening. That Elon Musk is trying to get away with less people, but you do need people to engage. I mean, maybe not hand assembling each vehicle. Well, certainly not if you look at the build quality, because it's not great build quality nor great paint quality on Tesla. But that's not what he's about. He's a tech company, and if he can get more robots in and less human beings, he will do it.
All right. And what about the ongoing push to EVs with this looks like somewhat of a shift here for the Biden administration? A major oil and gas lease sale that was mandated by the so-called Inflation Reduction Act was indefinitely postponed here. Obviously, a lot of nervousness about what's happening around the world with the oil situation in the Middle East and so forth. What's your reaction to that? And give us an update on what's happening with this EV push in the face of all that's happening.
Well, if you look at the true cost of an electric vehicle, there's quite a few articles, and this is something really interesting. When you see a lot of articles coming out about something suddenly that you didn't see in the past, there's a narrative going on. So I have been talking about for a long time the truth about electric vehicles. I've taken a lot of heat from car manufacturers and other media saying, they're pro-electric cars, let's go, go, go. And you know that because we've discussed this. But what's interesting is suddenly Daily Wire, Fortune Magazine, New York Times, New York Post, all these outlets are suddenly coming out with anti-EV stories. All the news outlets, all the mainstream media. And to me, that throws a flag. Why is suddenly out of the blue all these outlets allowed to write negative stories about electric cars? Now, it may be true that some people have had bad experiences and some people have had wonderful experiences. But a lot of these studies are showing the true cost of owning these vehicles. They're claiming all in. When you add the insurance, ends up being substantially more than that of a gasoline car or a hybrid vehicle. So people are looking at hybrids, and although the state of California is pushing very hard to go all electric, there's also 200 companies that are going to be suing the state of California. They've got together in a large lawsuit that I just heard about today. And this is interesting because they don't want all electric cars because the grid can't support it. Wind and solar is not doing the job that they claimed it did, which I've also stated. You can only get 18% of our need. And all it does is put a burden on everyone in California, everyone across the country that's going to end up paying more for everything. And that's your utilities, that's for charging, for gasoline and everything. So hopefully we can get some sanity in this world when it comes to not mandating something and letting you make the choice for what works best for you.
Gee whiz, just thinking out loud, maybe it's because Tesla is non-union? Biggest EV company?
It's possible. What we're seeing a lot of is people waking up, people that are purchasing electric cars and not getting what they're promised. And surprise, the ranges aren't at all what they promised. And that's one of the things. There was just a recent study done by Society of Automotive Engineers, which I am a member, on electric vehicles. They found that the average vehicle falls short by 12.5%. So if you're promised 300 miles and you're only getting 250 miles, you're not going to be a very happy person, especially if it's raining out. You want to use heated seats, you want the radio on, the wiper blades, all that uses energy. And you wouldn't be the case if you were driving a gasoline-powered vehicle or a hybrid. So I think what you might see in the end is just more options, but along the way, they found that 21 different brands did not meet the EV standards that were claimed to. So we were overpromised and underdelivered, and consumers are getting mad. And so that may be why we're suddenly seeing this new narrative coming out.
Very interesting. And right quick, here we are, November 3rd already. Isn't the LA Auto Show coming up? Are you coming out here again?
Yes, I will be out there for the LA Auto Show. Media Days is obviously a different week than for consumers. I'll be out the week of the 13th. There all week. We'll be testing cars for the World Car of the Year Awards. And then we have Media Days 15th and 16th open to the public. I believe it's Friday the 17th, and then Saturday the 18th is the full big reveal day. But there's going to be a lot of things to do there. So if you haven't been to an auto show in a long time, definitely worth the time. There'll be some really unique vehicles and a couple launches there, too.
That's terrific. We'll hope to see you out here, Lauren. Thank you very much for taking the call tonight. That is our auto expert, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Live with us here tonight on Mottek On Money on 790 KBC. Mottek On Money continues here on 790 KBC. Big finish to a big week on Wall Street. The Dow gained 5.1% this week. The S&P 500 of 5.9%, and the NASDAQ jumped 6.6%. The market seeing its best weekly jump since November of last year, basically, with the Dow closing up 222 points today, the S&P 500 up 40, and the NASDAQ tacking on another 184 points. This in reaction to the big enchilada, the monthly economic reports we got today, and that's the jobs report from the Labor Department. It turns out the U.S. added a modest 150,000 new jobs in the month of October, and a sign of cooling demand for labor, and this fueling investor hope that the Fed might be done with raising interest rates. The nation's unemployment rate did tick higher to 3.9% from 3.8%. Joining us live now is Kevin Harbour, the president of the BizFed Institute. BizFed Institute, that's the Los Angeles Business Federation Institute, LA BizFed. And we want to get a view of what's happening on the local scene here with the economy and the job market. Kevin Harbour, thank you very much for taking the call live with us here tonight. It's been a while since we chatted behind live microphones. Give us your view of things here in the Los Angeles area.
Well, first of all, good afternoon, Frank. Glad to speak to you. And we're really excited to share what's going on with BizFed Institute and our view of the world. Just for your, in case those that aren't real familiar with us, our mission is to connect decision makers with thought leaders through timely, interactive forums. As you know, our goal is to make sure that they're relevant and impactful, and that they pertain to the issues that affect our regional economy and quality of life. And so just to give a quick recap on what we've done so far this year, everyone has noticed that the price of everything, it seems like, has increased. So we wanted to really dig in on that, and we convened a supply chain and goods movement forum in February, and we had a heavy focus on the vital importance of goods movement and as it pertains to operations. And, when you talk about goods movement, people say, well, what does that mean? It means that, wherever a product is manufactured, it has to be delivered to a mode of transportation. If it's in the Pacific Rim or across the Pacific or Atlantic Pond, as we call it, it probably lands in a logistics center, then gets loaded to ships and brought to port here to another logistics center, and then it's loaded on a train, plane, or train, plane, or truck, and then to delivery vehicles all across the country. And so by bringing the subject matter experts, the decision makers, all into the same room to identify where those gaps are in the supply chain, we've been able to help figure things out, fix the supply issue that a lot of businesses are facing, and hopefully reduce costs of goods and services.
Terrific.
So that was the first one.
We're on the air live with Kevin Harbour, the president of the BizFed Institute. And, of course, you've kept us well informed in promoting a business here in the Los Angeles area. BizFed, of course, the voice of business in Los Angeles. And as I've said at some of our forums, you make me sound like Shirley Temple. So you're doing an amazing job there, along with Tracy Hernandez and Mark Wilbur and others we talked to here on this program. And on the job front, certainly want to mention something coming up here that you brought to our attention. If anyone's looking for their dream job out there here in Los Angeles, I see the BizFed Institute has organized a workforce development forum and career fair coming up next week at UCLA. Can you tell us about that?
Sure. Be happy to. So we are convening a workforce development forum at UCLA's James West Alumni Center with the mission being to analyze the state of our workforce in the public and private sector. Once assessed, we then need to elevate the skill of our workforce through strategic preparation, education, application, and calibration in order to compete globally. So we brought some of the brightest minds together, Dr. Chris Thornburg, President CEO of Beacon Economics. We have Jermaine Hampton, Workforce Development VP at LAEDC. We have California State Assembly member Reggie Jones Sawyer, but we also have a strong group of panelists from public sector to private business, from MWD, from SoCal District Council of Laborers, John Pisciotto, Frank Artarte, from Kaiser, VP of Human Resources, and Frank Gerardo from BYD Ride. So the whole idea is to bring these folks together to talk about, number one, the status of the workforce development situation here in the Southern California region, but also number two, that will be discussed in panel two, led by Quentin Strode of Vermont Slauson Economic Development Corp. Are we prepared? And if we are not, how do we get there? So Eric Ballard of UCLA Extension, Mallory Vaquero, General Manager from Think Together, Chris Cagle, South Bay Workforce Investment Board, Dave Whelan, Bioscience LA, they're going to come together and have that discussion. It's going to be powerful. There's going to be solutions there. We encourage you to go on our website at bizfedinstitute.org. And then following that immediately, we're going to have a career fair, which is something that is new to us. But we've had a tremendous response with a lot of major companies looking for talent, looking to increase that jobs report for November. So it'll be from 1 to 3 in the same facility. We encourage you to register both on our website. And Frank, I want to thank you also for helping us to get the word out in hopes of continuing to move our economy forward, because a strong workforce means a strong business. And we want to make it easy to continue to grow our businesses here in Southern California and the economy.
Well, it's for us to thank you, Kevin Harbour, for all the work you do promoting business here in the Los Angeles area. That is Kevin Harbour, the president of the BizFed Institute. And again, you can get more information about the big event coming up on Wednesday at UCLA at bizfedinstitute.org. Kevin Harbour, thank you very much. And to everyone there at BizFed, we wish you a great weekend. And thank you very much for taking the call live with us here this evening.
Hey, thanks, Frank. You've always been a friend. Look forward to seeing you soon.
Yes, sir. Thank you very, very much. Great speaking with Kevin Harbour tonight at the BizFed Institute. Stay tuned now for the 790 KBC News Blitz with our legal eagle, Royal Oaks. That's coming up next for you right here, and we'll be back again Monday evening at 5 o'clock for Mottek On Money on 790 KBC.
Are you ready to focus on what you're truly passionate about? At the University of Massachusetts Amherst, we're committed to helping students design a meaningful path for their future. As one of the country's top-tier public research universities, we're helping drive the world forward, empowering students to challenge convention, champion innovation, and embrace the freedom of affecting real positive change in the world. Tap now to explore flexible options for a high-quality education or visit umass.edu. Be revolutionary.